Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow, so the commitment of traders, which is essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that we just had a massive impulse to the upside and now the start of a correction. Now, all this impulse to the upside is actually coming as a rejection away from a quite strong historical structure level, which held the market and it was respected by the market as resistance for many years. In fact, this level was acting as previous resistance all across this zone, with the market rejecting it to the downside in multiple occasions throughout the years. And then the market, with this impulse to the upside, broke above the level. And what we know is that if there is a level of resistance in the market, which is being respected as resistance in multiple occasions, and then the market manages to break above the zone, at that point, that previous resistance becomes support. So after the break, on the retest of the previous resistance turns support, that is when there is a high probability to see more bullish continuation. And in fact, in this case, that is exactly what happened. After the break, all this previous resistance became support. The market tested the previous resistance turn support and is currently rejecting it to the upside. Now, in every bull market and every bullish market, when there is an uptrend, what you would expect is for the market to create a series of impulses and corrections, which are actually creating the trend itself. So creating the higher highs and higher lows, which is the definition of an uptrend itself. So in a situation like this, what you would actually expect is for the market to first provide a correction and then more bullish continuation. What you would expect, more precisely, is for the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg and then print more potential bullish continuation. Now, if we look closely, we can also see how now we have the first red candle. Now, especially if this red candle will close in 4 days and 6 hours with a very large wick, usually the next candles tend to fill in that wick, because it means that on lower time frames, what we will actually see is an impulse and a correction, in which the wick that we see here on the monthly is actually the correction on the lower time frames. And after an impulse and correction, at that point, there is an increased probability, in this case, of seeing more bearish price action being developed. But before we dig deeper, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is that first we had the creation of this M pattern, then the M pattern was completed as you would expect, and now the market is slightly being rejected to the downside. We don't really see much more apart from the fact that at the moment the market seems to have broken the uptrend. In fact, we can notice how the market clearly had an uptrend here, and now it seems like for the first time we had the creation of a new lower low. The previous low was here, the market broke below it. At that point, that previous support is now turned resistance, and the market seems to be finding some resistance, in fact, around this zone, even though the precise resistance level is not that clear by looking at the structure here, which the market seems to have first broken to the upside and then back to the downside. But to dig more into details, we have to go down on the daily time frame. Now, here on the daily, this is where things get quite interesting. Now, first of all, I did speak about gold quite a few days ago, when the market was around this area. I explained all the reasons for which we could expect this rejection to the upside, and in fact, that is exactly what the market gave us. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. And at the moment, the market seems to be rejecting this level here, which is a previous zone of supply and resistance because it was previously support, which at the moment the market is respecting quite precisely, in fact, as supply and resistance and rejecting it to the downside. Now, this rejection is quite strong. As we can see, it has already engulfed more than 2 daily candles to the downside. And if we will see this strong bearish close, there's a good probability of seeing another test of the area and then more potential bearish continuation. That is definitely a possibility. Now, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on gold. Now, what we can see here is that with the last reports, there has been a massive decrease of net positions, which went from 296.2K all the way down to 234.3K. So we have seen a massive decrease of net positions, with a lot of institutions moving back to the bearish side for gold, therefore making it weaker. Especially, we have seen a huge amount of profit taking from an institutional perspective, with first 29,000 longs getting closed, then 20,000 longs getting closed, and now another 6,800 longs getting closed. So here in the monthly time frame, institutions seems to be taking profit after this massive push to the upside, which could very easily trigger a deeper correction before then seeing new buyers enter into the market and potentially push it higher. So there is definitely the possibility of seeing more bearish price action as institutions are taking their profits on the longs and decreasing their net positioning from an institutional perspective. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market at that point, I wouldn't be surprised to see a potential rejection to the downside, creating a deeper correction from a monthly standpoint. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.